The Auditor-General provides assurance to Parliament on the accountability and performance of the Victorian public sector. The Auditor-General conducts financial audits and performance audits and reports on the results of these audits to Parliament. On the 12th of December 2013, the Auditor-General tabled his financial audit report, Water Entities, Results of the 2012-13 Audits. The Victorian water industry comprises 19 water entities and one controlled entity. The water entities provide water, sewerage and trade waste services to the Victorian community. This report provides the results of the financial audits of the 20 entities. However, the controlled entities ceased trading on the 13th of August 2012, and so the presentation relates predominantly to the 19 water entities. Unqualified audit opinions were issued on the financial reports of the 20 entities for 2012-13. The average time taken by the 19 water entities to finalise their 2012-13 financial reports was 8.4 weeks, consistent with 2011-12. Overall, the water entities produced accurate, complete and reliable financial reports. However, they can improve their financial reporting processes to reduce operating costs and further improve timeliness. 16 water entities were required to include an audited performance report in their annual report for 2012-13, containing predetermined indicators and targets, actual results achieved, and explanations of significant variances in performance between the targets and prior year performance. All 16 performance reports received unqualified audit opinions for 2012-13. However, their usefulness is limited as 9 of the 16 did not set targets for some indicators. This is, in part, an outcome of the disconnect between the corporate planning processes of the water entities and the industry's 2012-13 performance reporting requirements. City West Water, South East Water and Yarra Valley Water are encouraged, but not required, to submit a performance report for audit. Consistent with the prior year, the 3 entities chose not to do so for 2012-13. Each of the 3 included financial and non-financial indicators within their annual reports. However, the information was unaudited. To provide Parliament with reasonable assurance that the performance information is reliable and accurate, the 3 entities should submit their performance reports for audit. During 2012-13, an industry working group evaluated a suite of proposed key performance indicators for relevance and appropriateness. After liaison with the industry, the Department of Environment and Primary Industries required all entities to reflect the agreed indicators in their 2013-14 corporate plans. There is an expectation that targets will be set for all indicators and performance reported against them in 2013-14. The 19 water entities generated a combined net profit before income tax of $110 million for 2012-13, a decrease of $497 million, or 82%. In 2011-12, Melbourne Water, City West Water, South East Water, Yarra Valley Water and Western Water collected payments from customers to cover the costs of purchasing water from the Wonthaggi desalination plant. However, due to delays, the plant was not operational and the amounts paid by customers not needed. From 1st of July 2012, water entities began returning the payments to customers via a 12-month price freeze. At 30th of June 2013, the Essential Services Commission estimated that the water entities had returned $265 million to customers by 30 June 2013, comprising $167 million returned via the price freeze and rebates of $98 million to eligible customers. The industry's decrease in net profit before tax in 2012-13 was predominantly due to a loss of $45.1 million by Melbourne Water compared to a profit of $372.8 million in 2011-12. Its result in 2012-13 was impacted by an increase of $300 million or 120% in finance costs following the Wonthaggi desalination plant achieving practical completion on 17th of December 2012 and the previously mentioned water price freeze. In 2012-13, dividends from the 4 metropolitan water entities totaled $238 million, $31 million or 12% less than in 2011-12. The 3 metropolitan retailers were required to make their 2011-12 final dividend payments, as well as interim dividend payments on their 2012-13 half-yearly results. The 3 entities borrowed funds from the Treasury Corporation of Victoria to pay the dividends in light of their cash flow requirements at the time payments were made. Interest-bearing liabilities increased by $5.4 billion, or 59% during the year, due predominantly to Melbourne Water's recognition of the desalination plant as a finance lease and new borrowings to finance the construction of infrastructure and to pay dividends. Financial sustainability should be viewed from both a short-term and long-term perspective. The 7 indicators reveal no significant improvement for the industry over the 5 years to 2012-13. Interest-bearing liabilities, comprising borrowings and finance lease liabilities, have increased by $10.3 billion or 248% over the 5 years. Finance costs now account for 21% of the water industry's total operating costs each year. It is critical that the water entities effectively manage interest rate risk. The debt service cover ratio indicates that the ability of one metropolitan water entity to repay debt is low, and another may encounter difficulties in repaying debt. Servicing the growing debt and repaying the debt in the future are key challenges for the industry. 4 entities had a high financial sustainability risk at 30 June 2013 due to the magnitude of their operating losses, in part an outcome of the regulated pricing model. This is one of a number of matters being considered by a water industry financial sustainability working group. The 19 water entities rely extensively on information technology and upgrading or replacing systems to improve information management and the quality of services provided to the community. While IT controls were adequate for producing reliable and materially accurate financial reports, areas for improvement were identified with weaknesses found at 11 of 19 entities. 22 IT issues raised in prior period financial audits remained unresolved at 6 entities at 30 June 2013. The failure to address previously identified and reported internal control weaknesses reflects poorly on both the governing body and management. We noted instances of non-compliance with approved IT security policies and procedures. Only 12 entities had appropriate processes to detect and report on network intrusions. Reporting on security breaches to the board or an IT steering committee was by exception. These findings are consistent with the weaknesses reported by the Auditor-General to Parliament in November 2013 in our report Whole of Victorian Government Information Security Management Framework. Procurement frameworks were generally adequate. However, the high incidence of non-compliance with procurement policies, procedures and control activities identified by internal audit indicate there are opportunities for the governing bodies and management to improve practices. Our review of 7 tenders indicated conflict of interest declarations were not always completed by members of tender evaluation panels. This means that the water entities could not demonstrate they had mitigated the risk of bias in the evaluation process and that the integrity of the process had been maintained. The importance of an effective treasury function has increased as the water industry's investment in new infrastructure has been largely funded by new borrowings. Controls over treasury management at most water entities were established. However, the level of compliance with the approved policies and procedures varied. For example, 4 entities breached their own treasury management policies by not adhering to their approved debt maturity profiles. 4 water entities did not align their borrowings with the related capital projects, reducing accountability over their use of borrowed funds. 1 entity delayed final payment to a contractor as insufficient funds were available when payment was due. It incurred penalty interest at a rate of 18% on the outstanding amount, a waste of approximately $90,000. And 10 water entities did not complete their compliance certifications within 1 month of year-end, as required by the Department of Treasury and Finance. The report contains 13 recommendations, 11 directed towards the water entities. There is an opportunity for the Department of Environment and Primary Industries to revisit the Model Performance Report to facilitate a greater degree of compliance with the performance reporting requirements. Recommendations made to water entities related to performance reporting and information technology control weaknesses. There were also recommendations regarding conflict of interest declarations. And there is a need for the Department of Treasury and Finance to take a more active role in overseeing the treasury management activities of the water entities, given the growth in interest-bearing liabilities over the past 5 years and the control deficiencies highlighted in the report. The Department has accepted the recommendation. All our reports are available on our website. If you have any questions about this or other reports, or if you have anything else you would like to discuss with us, including ideas for future audit topics, please call us on 03 8601 7000 or contact us via our website.